What's going on, YouTube? Today, I wanted to talk a little bit about the Federal Reserve and the federal funds rate. So today they had their meeting and they determined that they weren't going to cut rates anymore. Their interest rate cutting campaign has stopped. Maybe it has something to do with the fact that year over year, inflation is up from 2.7 to 2.9%. I don't know. Maybe they're seeing something in the economy that you and I don't see. I don't know. But as of right now, they're going to go ahead and take a pause on cutting interest rates. So anyway, anyone who was anticipating that they were going to continue on this rate cutting campaign and mortgage rates were going to be lower, it's not looking like it's going to come to fruition anytime soon. You know, in all actuality, you know, the Fed follows the 2-year Treasury, and they've been cutting. They've been cutting, 100 basis points they've already cut, you know, from 5.5 to 4.5, you know, they're down 100. But ever since they started cutting their interest rates on the short end, interest rates on the long end, the 10-year Treasury, went up 80 basis points. And that's poised to happen again. You know, anyone who purchased a home over the last year at a higher mortgage rate or higher interest rate really did it under the impression that the Federal Reserve would be cutting rates and mortgage rates would be going down, and they would be able, their home price would go up, interest rate would go down, we'll be able to refinance, pull out some liquidity, go take a trip to Hawaii and buy another rental home, whatever it is. That was their justification for buying a house with a 7.5% or even higher mortgage rate or interest rate. And it's starting to look like the 10-year Treasury is poised to tick upward again. So mortgage rate relief, maybe not all of 2025. You know, they've stopped cutting interest rates. Where will interest rates be at the end of 2025? We're already seeing a historic low in the mortgage application rate. You know, people aren't buying houses. They're just not. It's pretty apparent. Just maybe in certain areas that are more desirable than others, but generally speaking, there has been a very broad deceleration in home purchases. You know, and a lot of people speculate that all of 2025, you will have sub 4 million transactions or home purchases in 2025, which is pretty freaking low. And when you think about it, that makes perfect sense. You know, especially if the 10-year Treasury is poised to go up, which means mortgage rates go up. It's not good. It's not good for the people who purchased homes over the last year anticipating mortgage rates would be down. They'd be able to refinance, pull out some money, and buy another rental property or buy a new Beamer, whatever. It's not good for them. So the Federal Reserve has stopped their interest rate cuts, and they are continuing to reduce their balance sheet. You know, and what does that mean? What does that mean when the Federal Reserve? Basically, what it means is they're selling their assets, right? Reducing their balance sheet means they're just selling their assets. And what are their assets? They're selling treasuries, they're selling bonds, mortgage-backed securities, and that. When the Fed's dumping mortgage-backed securities, I don't care how you look at it, like, that's not going to be good for the real estate market. No ifs, ands, or buts about it. They're going to be flooding the market with mortgage-backed securities. How's that good? And the 10-year Treasury is poised to tick up again. Mortgage rates might be going up, not down. So we'll see what happens. And it really begs the question, like, why did they stop or discontinue their interest rate cutting campaign? Why? Is it just because the inflation rate year over year went from 2.7 to 2.9%? Is it because Donald Trump's in office and they want to kick back and see what he does with his policies? Is he going to reignite the inflationary flames, or is he going to, deport millions of illegals? Like, what, why did he pause? I don't know. And it's funny because he can continue to hide under the cloak of the economy's still good. mortgage rates or housing prices are still all-time high, and they are. And unemployment is still historically low, and it is. Stock market is still doing really good. They shouldn't have started cutting interest rates in the first place. They should be going back up, and especially this proves it. Inflation rates going from 2.7 to 2.9%. Why did you even cut interest rates? From 5.5 to 4.5, unbelievable. And it makes you wonder, what will interest rates be at the end of 2025? Will they continue to cut in future? And if they do start cutting, what will force them to cut? Is it the stock market going down by 50%? Is it the unemployment rate going from 4.4 or 4.1 to 8%? Like what forces the Federal Reserve to cut interest rates drastically and start printing money again and injecting it into the banking system, right? Because what they're doing right now with reducing their security holdings and selling their assets, really what that means is the banking system or the banking sector is not going to be as flushed with cash, which is not good for the banks. When they don't have cash, they don't sell people loans. Like this is what the banks do, right? They sell you and me loans. They give us loans, car loans, business loans, mortgages, home equity lines of credit. This is what they do. This is how banks make money. They sell you money. And when they don't have money to sell, it's not very good. It's not good for the economy. It's not good because what does that mean? That means that you and I aren't going to take out a credit card and go to Costco and go on a shopping spree. And when Costco's sales go down because I'm not borrowing money, maybe it impacts their stock prices. And when their stock prices start to go down, maybe they say, oh, well, we got to start laying off some people. And then the unemployment rate goes up. It's just a domino effect, right? It hasn't really taken place yet, It hasn't materialized, to be honest, because it's true. The other day we saw a little bit of a dip down in some of these Mag 7 companies, the Magnificent Seven, and it was all apparently because of this Chinese artificial intelligence, DeepSeek, right? They came out with their own updated version of or new software in artificial intelligence, and apparently they modeled it and created it for $6 million. I don't know if I believe that, and it's competing with ChatGPT. It's competing with Gemini, Google's AI. It's competing with all of the big hitters, Microsoft, everyone, Tesla and their OpenAI, whatever it is, right? And boy, some of these tech companies dropped. They I forget what it was. What is it? Nvidia dropped by 18% in a day. We're talking about billions and billions of dollars in losses in one day. And it was all because these Chinese guys released some software that they say they created for $6 million. And we're creating this same software or very similar software for tens of billions or hundreds of billions, And what does that mean, right? What does that mean? That means that the Chinese are just really efficient with what they do, or are they stepping on the toes of Microsoft, Tesla, Nvidia, saying, you guys are going to be selling a subscription fee to businesses, saying we're going to give you artificial intelligence and their utilities and their tools associated with it, but you're going to pay a monthly premium. And then all of a sudden, DeepSeek, the Chinese version of AI, comes out and says, ho, 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 we're going to give it to you for free. And that just crushes the business model, right? What do you do if China releases their AI and they give you the same tools, but they give it to you for free? And in return, all you have to do is give them your data, which is what it is. It's a data harvest, right? When you think about it. So, but obviously, NVIDIA going down by 17% in a day wasn't enough to trigger the Federal Reserve to start cutting interest rates. Maybe it was just an anomaly, right? Maybe it was just a one-day dip. Maybe it had nothing to do with DeepSeek. I don't know. So, but in the meantime, really what it means today is they might be done cutting interest rates. The Federal Reserve might be done cutting interest rates. And if they do cut interest rates, The question is why? Why will they start cutting rates again? You know? And what will mortgage rates be? What will interest rates be at the end of 2025? Anyone who is anticipating that rates were coming down to refinance, it's not looking like it. It's looking like mortgage rates might be going up a little bit. So the 10-year treasury is poised to tick up. And that's not good if you're thinking about refinancing in the near future. It's not looking like it. And then it really makes you wonder, have interest rates stabilized? Is this the new normal? I don't know. I guess we'll see. So, but I will tell you that these interest rates, we're starting to see the effects. Businesses are slowing down. You're seeing more and more companies cutting jobs. You're seeing the mortgage application rate at a 29-year low. It's not good. It's more downward pressure, and especially since they're not cutting anymore. So we'll see. We'll see if they're done cutting rates for 2025. But in the meantime, there's other central banks that are cutting. The Bank of Canada cut rates today, and they stopped QT. The Canadian economy has slowed down pretty substantially. Apparently, there's a bunch of Canadians, or snowbirds as they call them, selling off their condominiums in Florida because the exchange rate's not really in their favor anymore. Or maybe they're just pressed for cash. Maybe they're running out of liquidity and are starting to be forced into selling. You know, who knows? Anyways, Canada's cutting rates. The central bank in Sweden is cutting rates. Tomorrow is going to be the European Central Bank, and they're going to follow the globe. They're going to be cutting rates. China's cutting rates. And it's because all of these economies are really starting to slow down. And the central banks in these economies are trying to stimulate the economy to get things rolling again. You know, and it really, it's so blatant. It's really a globally synchronized interest rate induced recession. That's what it is. When the Americans don't have liquidity, or when interest rates are high, so we don't borrow money from the bank, we don't buy all of their products. We don't buy Canadian products. We don't buy Chinese products. We don't buy German products. We don't buy products from France. And their economies are starting to slow down substantially. And you're seeing it. You're seeing it. Like, the numbers don't lie. So anyways, I just wanted to give you some of my thoughts today on that. And let's see what happens in March. The next Federal Reserve meeting is going to be in March. And they might be done cutting interest rates for all of 2025. We'll see. And if they do cut, it's probably not going to be for a good reason. So anyways, just some of my thoughts. And thanks again, guys, for everyone who watches and likes my videos and stuff. I appreciate it. It's really cool. Thanks again. Until next time, guys.